Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Geopolitical tensions and macro data converge to define today's trading landscape. S&P 500 futures edged up 0.11%, pushing toward record highs as traders aggressively price in the potential for a US-Iran peace deal. The Nasdaq 100 futures led the charge, climbing to 28,717.68, signaling strong risk appetite among equity investors. This rally is not just about equities, it reflects a broader shift in global liquidity dynamics. Meanwhile, the Chinese yuan has surged to its strongest level in 3 years against the US dollar. This currency strength signals a significant pivot in macroeconomic flows, potentially tightening global dollar liquidity and impacting cross-border capital movements. In related news, the geopolitical landscape remains volatile elsewhere. Asia's refined fuel exports have collapsed to multi-year lows following the closure of the Strait of Hormuz. This disruption has halted 80% of pre-war cargoes, sending jet fuel prices soaring by 70%. This energy shock contrasts sharply with the diplomatic optimism in the Middle East, creating a complex backdrop for commodity traders. On the trade front, outgoing EU trade chief Sabine Weyand has officially dismissed the 2020 China investment deal as obsolete. Weyand's stance signals new trade weapons against Beijing's macroeconomic imbalances, adding another layer of complexity to global supply chains. Amidst these structural shifts, the crypto market is seeing innovative onboarding strategies. Phemex Academy has launched a professional crypto trading track featuring live simulation tools. This initiative aims to bridge the retail education gap as Bitcoin trades at $81,266. By providing realistic trading environments, Phemex is targeting the next wave of retail participants who are wary of direct market exposure without proper training. Looking ahead to today's release, the economic calendar is packed with high-impact data that could override geopolitical narratives. At 12:30 Universal Time Coordinated, the United States will release its non-farm payrolls. The forecast stands at 95.0K, a significant drop from the previous 178K. This sharp deceleration in job growth will be closely watched by the Federal Reserve. Simultaneously, the U.S. unemployment rate is expected to hold steady at 4.3%, matching the previous figure. For global markets, the Canadian unemployment rate is also due at 12:30 Universal Time Coordinated, with forecasts predicting no change at 6.7%. Later in the day, at 1400 hours Universal Time Coordinated, the U.S. Michigan Consumer Sentiment preliminary reading will be released. The forecast is 50, up slightly from the previous 49.8. This indicator will provide crucial insight into U.S. consumer confidence, which remains fragile amidst inflation concerns. On the Asian side, data drops at 3 o'clock Universal Time Coordinated will be critical. China's exports year-over-year are forecast to rise to 7.9% from 2.5%, while imports are expected to surge to 15.2% from 27.8%. The balance of trade is projected at $79.1 billion, up from $51.13 billion. These figures will test the resilience of the yuan's recent strength and validate the EU's concerns about Chinese economic imbalances. That's your market briefing. Follow Rumour with AI for daily market intelligence.